Our trade on Robinhood stock has now returned more than 200% profit. And the same wealthy investor we've been tracking, the one that led us to this winning trade, just placed another trade worth $29 million. And so in this video, we'll break down how this same wealthy investor is now trading Robinhood stock. Is it still bullish and buying, expecting it to move even higher, or bearish and selling, expecting it to drop lower? We'll also show you how we updated our options trade using the same strategy from this wealthy investor to manage risk and protect gains, a smart risk management approach that can be applied to other trades. This risk-free strategy allows us to capture additional profits if the stock moves higher, while taking no loss if it drops lower. And so, if you've been following our work or subscribed to our channel, you'll know that on this day, August 6th, when the stock was trading around $105 per share, we detected an unusual trade on Robinhood placed by a wealthy investor. This was the video that we shared on our channel about 2 months ago, analyzing a $22 million options trade to help determine whether it was too late to buy Robinhood stock. And after analyzing the data, it was clearly flashing a buy signal, indicating that the stock would move even higher, that it was not too late to buy Robinhood. So we entered our bullish trade based on our analysis, and as it turns out, that analysis was correct and highly profitable because Robinhood stock is now trading much higher at $145 per share after recently hitting a new all-time high. So if you want to learn how we predicted this stock rally, we'll link this video at the top. Make sure to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, how much profit did we actually make from this trade? Understanding the size of that profit is important because it's what led us to get the best of both worlds, closing our trade to take profits, but then opening a new trade to stay in so we don't miss out on more gains. And so, if we had simply bought the stock by using shares, we'd be looking at a solid 37% gain. But since we used call options instead of just buying shares, our profits were even higher, thanks to the leverage that options provide to amplify returns, capturing even bigger gains. So, what was our return on investment? Well, let's take a look at our original analysis using the risk profile graph, focusing on our October 17th options at the 105 strike calls, priced at $10.74 per contract when we entered this trade. And remember, this shows option prices, so we either move the decimal 2 places to the right or multiply by 100 since each options contract controls 100 shares of stock. That means each option contract initially cost $1,074. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already includes the cost of the trade. That's why you can see on the blue line that if the stock had dropped down, it would have been a negative $1,074 loss, the entire cost of the trade. But instead, it went higher to about here. So we have a profit of $2,997 per contract. And so to calculate the profit percentage, we take the profit of $2,997 and divide it by the initial cost of $1,074 and then multiply by 100 to express it as a percentage. And that gives us a return of 279% profit. And remember, the stock itself only gained about 37%. But by using options instead of just buying shares, we leveraged that 37% move into over 7 times the return. That's the power of leverage in options trading. And so This is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. So if you want to get access to deep insights like this, head over to our website. We'll put a link up here. Keep in mind that if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email, giving you even deeper access. So if you want more opportunities to profit, make sure to join the membership through our website, where you can see which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. That's why we do not follow just any wealthy investor. We track the smart ones who are highly strategic. Because based on the latest data, this wealthy investor wasn't just making a new trade. They used a risk management option strategy that we often use ourselves to minimize losses while maximizing profits. So let's go over how we use the new data to adjust our trade here into a strategy that gives us more upside potential while managing risk to reduce losses. And so, as we can see here on the options time and sales tape, unusual option activity happened on October 7th at 10:29 a.m. at the 56-second mark. For these October 17th options at the 105 strike calls and the December 19 options at the 145 strike calls, a quantity of 16,280 contracts were being traded. But remember, these October 17th options at the 105 strike calls are the same options from our original trade. So what's going on here? Well, based on our deeper analysis, this same wealthy investor was closing their previous positions at the 105 strike calls to lock in profits and then rolled into a new position at a higher strike price and a later expiration date. This means that these December 19th options at the 145 strike calls is the new opening trade, and these contracts were being traded at a price of $17.90. So we can calculate the total cost of this new trade by multiplying this price per contract by the number of contracts traded. First, we convert the option price of $17.90 into actual dollars by multiplying by 100 or simply moving the decimal 2 places to the right. So that's $1,790 per contract. Next, we multiply by the number of contracts traded, 16,280, and this equals a total trade cost of approximately $29 million for this new trade. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to those lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. With that said, even though this trade carries higher risk, we still took it, but only because we locked in profits from our original trade, just like how this smart wealthy investor did, by using an options rolling strategy to reduce exposure and manage risk. So let's go over exactly how we did this. As we can see here on the option chain, our original trade was for these October 17th options at the 105 strike calls, and we can see at the open interest that there's only about 4,000 contracts open, which is less than the 16,000 contracts just traded. That's how we knew this wealthy investor was not opening new contracts at the 105 strike calls. Instead, they were closing their existing position here, locking in profits. Notice how these contracts are now worth between a bid-ask price of $4,005 to $4,030. And remember, these contracts were only going for a price of $1,074 each when we first detected and entered this trade. That's why it turned into such a profitable trade. So we also closed our 105 strike calls by selling them, locking in profits, and then, just like what this investor did, we rolled these options into a new trade at a higher strike price and a later expiration date. The December 19th options at the 145 strike calls, where you can see our new position here marked as POS, which stands for our position, and the green color indicates a buy position. And notice how there's about 18,000 contracts opened here, which is more than the 16,000 contracts just traded. After confirming that these contracts were added to existing open interest, we verified that those 16,000 contracts came from this wealthy investor opening new trades at the 145 strike calls, not closing them. We always take the extra steps to verify the data at a deeper level. Many other websites and scanners simply report every high volume unusual trade without filtering out closing trades, and that often leads to false signals, wrong results, and losses for those following unusual option activity. And that is why our deeper analysis gives us more winning trades than other websites. And in this case, we confirmed that this wealthy investor was opening new contracts for the December 19th options at the 145 strike calls and closing contracts for the October 17th options at the 105 strike calls. So that's why we used our profits from the same closing trade to buy these 145 strike call options. In other words, we opened a new trade that cost less than the amount we sold our original trade for at the 105 strike calls. That means we entered this new trade at a credit, not a debit, reducing our risk by using only the gains from our earlier trade. And so when we analyze our trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same October 17th options at the 105 strike calls. So we are just left with the 145 strike calls that expire December 19th. And so on the graph, we can see here that if Robinhood stock drops from where it is now, or even crashes, our trade would not have any negative loss. It will always stay positive because we've locked in more profits than the cost of our new trade. This is how we manage risk, by minimizing losses. And in this case, we completely eliminated any possible loss while still staying in the trade to gain more profits if the stock moves higher. But keep in mind, this risk-free strategy was only possible because we followed this smart wealthy investor early, back on this day, before the stock moved higher. So if you missed our original analysis, we'll link that video here so you can see how we ended up with 279% profit, which allows us to now hold a risk-free trade. For more of our strategies, backed by our deep analysis and trade alerts, visit our website. We'll link it here. Take care and have a wonderful day.